What a great move we had in Ethereum at 21 times risk to reward ratio setup. 5 days ago, I said we're stuck within these two levels. And I said a break to 1,856 could trigger an entry with a stop loss at 1,822. What's happened since then is that we had that breakout and that stop loss was never triggered. So the way I work with stop loss orders out of rectangles or any sort of classical chart pattern is that I ask myself, where can I place my stop loss at a level where it should be safe enough that it shouldn't be touched? What does that mean? When you have a breakout of a rectangle like this, the price is allowed to swing back in, but it's not allowed to swing too much into the pattern. And we need to determine what that too much level is. And this is that level. So if we would have traded here and gone long and got out at the high, you would have walked away with, as I said, $21,000 if you would have risked 1K on this trade. Now, if you're looking at this today, we had a bit of a bullish push just now recently because there was an announcement from the US that tariffs on Chinese goods are coming down from 145 to 30%. That is really good because imports from China, per the report of LA, is telling us that imports are lower with 30%. And if this were to be allowed to continue for too long, what would happen is that you would be missing things on your shelves in the US. So some stuff that you took for granted before wouldn't be available, and whatever was available will be at a price at a higher level. This is now going to be reduced now going forward. So you will be able to get some of your stuff. Of course, some stuff that had very low margin to begin with would not return. Okay. So what does this mean here? Now, what's interesting is that the market reacted positively, moved up on this news, and then sold off. In the case of Bitcoin, it sold off very strongly. So I don't really like this price action too much because it should be good news, should be lifted. But the fact that we moved so much means that the good news has already been priced in to some extent. So that's a bit of a warning sign. So what could happen next? If we look at these charts, we are just at the 200 moving average and just at this key level here. So this is a very strong resistance. Now, 30% import tax is still much higher than they had before, and is still much worse than the worst case scenarios we had heading into these events, heading into Liberation Day. And there's going to be 30% in China and realistically 10% on everybody else in the world, which again is much worse than not just me, but all the economists think. Which means that realistically, we will have inflation in the US. We will have as well have a bit of an economic slowdown. So with that and combined with this, we need to be a bit careful at these levels. So how can we deal with that? Well, technically as well, we had pushed very strong to the upside. So the way I would deal with this, I'm still long quite a lot of crypto. I bought on the breakouts, and I'm going to hold this for a little bit longer. I want to see how the market reacts to the news. But I think this market is bound for a bit of sideways price action. And then whenever we have something similar to this, maybe we can go long again, especially if we break above this level. The alternatives, it would dip maybe 10, 15%, takes you down to something like 2,200 and something like that. And then from here, go long. What's your take? And were you able to capitalize on this move? Leave your comments below.